accounting for share transactions or accounting for share capital. So excuse me with the error in the spelling. It should be share capital transactions. So with this particular chapter, we will be able to first define what is a share capital, and then discuss the classes of the share capital, and know what is a par value and no par value share, and account for authorization of share capital using memorandum entry method and journal entry method. And in the later part, we'll also be discussing about the issuance of a share capital in different consideration like cash or on a subscription basis or in payment of liabilities, etc. Sige, to continue, so you have here, when you say share capital, this refers to the maximum amount fixed by the corporate charter in the articles of incorporation to be subscribed and paid in by the shareholders. The old term for this one is the capital stock. Okay, take note, your share capital is the maximum amount, okay, that the corporation can issue, no, or can lend it to be subscribed by the future shareholders or stockholders. And it is paid either in money or property, labor or services at the organization of the corporation. And we do have two classes of share capital. You have ordinary share, or the old term for this one is common stock or common share. And then the other one is the preference share. When you say ordinary share, these are called ordinary or common because shareholders have the same right and privilege and enjoy no preference over one another in terms of the distribution of profit, like the dividends out of earnings, or distribution of assets like liquidating dividends. Later on, as to the process of corporate liquidation, we'll discuss that, I think, after 2 chapters. Okay? And as to preference share capital, this is a kind of capital or a class of share capital wherein this is issued to attract more investors. Okay? So a corporation can issue a preference share. And preference shareholders are given privilege or specific right that the ordinary shareholders do not enjoy, such as preference on dividends. That is why you call it as preference share, because they are preferred over the ordinary shareholders in terms of dividends, meaning they are given first the dividends, they are the priority in distribution of dividends before giving it to ordinary share or ordinary shareholders. And then we have what you call as par value and no par value shares. I have mentioned this in the previous chapter. When you say par value share, it has a nominal value stated in the face or the certificate of the share, and it is fixed in the articles of incorporation. So it means if it is a par value, the amount, okay, per share is written in the article of the incorporation. In case of no par value, it has no par or nominal value printed on the share certificate or stated in the articles of incorporation. And it can be sold at any of the following amounts. And as I mentioned, if it is no par value, normally it will have a stated value. So first, it can be sold at the following amounts: at an amount prescribed in the article of incorporation, or at the amount fixed by the board of directors, or at the amount approved by the majority of the shareholders. So that is how you qualify or somewhat like sell the value of a no par value. Okay? Pwede siya, or it can be amount prescribed in the article of incorporation, normally stated value. You call it as the stated value. If it is fixed by the board of directors and approved by the majority of the shareholders, the rule is the value should not be below 5 pesos. Okay, so let's continue. Now let's talk about authorization of share capital. There are two methods in accounting for the authorization of share capital as well as subscription. We have what you call as the memorandum entry method and the journal entry method. Okay, these two methods normally differ in recording of authorization of shares and issuance of stock certificate. Okay. Let's Now, there are 4 basic transactions in accounting for share capital. We do have first, authorization as to a number of shares with par value. Second, subscription to the share capital. Third, collection of subscription receivable. And the last one, you have issuance of stock certificate or share certificate. Now, as to these 4 basic transaction, okay, memorandum entry method and journal entry method will differ in terms of first, the authorization of the share capital, and then the second one is the issuance of stock certificate. We will have a sample later on as to these methods, memo entry and journal entry method. Okay, to continue. Accounting for issuance of share capital. Now, as to considerations that the corporation will receive, a share capital may be issued by the following. First, it is either issued or sold for cash. Second, it is either sold or issued on subscription basis. Third, it is issued in exchange of a non-cash asset. Now, if it is issued in exchange for non-cash asset, we do have the basis for recording as to what value, okay, are you going to record. So this is the order of priority. For the non-cash asset, the amount that you will record in the book is first, the fair value of the non-cash asset. First, you will base it on the fair value of the non-cash asset. Second, if there is no fair value of the non-cash asset, the second priority is the fair value of the stock issued or the share issued. If there is no fair value of the share issued, you will base it on the par value. Now, there are times that the par value as well as the fair market value will be different, like par value, let's say 100. The fair value when you issue the share is 110. The difference, which is the 10 peso, you call it as share premium. Okay, share premium, or the other term for that is additional paid-in capital. That's the old term, additional paid-in capital. Now, in our example later on, we will have an entry wherein a particular stock is issued more than its par value. So you issued it at premium. You call it at premium, share premium. And the number 4, issued in exchange for services rendered or liability incurred. Now, if it is issued for services rendered or liability incurred, the basis for issuance is the amount of the liability or the amount of the service, okay, that the organization received. Again, any difference as to par value and the amount of service or liability, it will be recorded as share premium. And then number 5, if it is issued in exchange for equity securities of other corporation, the basis for recording will be the fair market value of the securities received. Okay? Now, if there is no fair value of the securities received, you base it on the fair value of the securities issued. If there is none, then you base it on the par value. So that's the order of priority. And then you will be asking later on, what if, miss, you issue a stock with a par value of 100 at 90 pesos? Would that be allowed? Or is it allowed? The answer is no. You call it as watered stock. Okay? In the corporation code, a corporation is not allowed to issue shares of stock lower than its par value. Okay? Now let's take a look at the problem for our discussion purposes as to accounting for issuance of share capital. Okay, this is 7-1 on page 308. The background of the problem you have here, Mandawi Marketing Corporation is authorized by its charter to issue 25,000 ordinary shares at a par value of 100 per share. And the incorporation papers were already approved by the Securities and Exchange Commission. You do have 3 incorporators who signed the articles of incorporation and made subscription and payment. Again, we are now allowed to form a corporation with less than 5 incorporators as long as it is not more than 15. Okay. Now you're given the name of the incorporators. You have Abelia, Atilio, and Baladhay with the share subscribed. Okay, and the subscription receivable and the subscription payment. Okay, I'll just read to you. For Abelia, you have 3,000 subscribed shares with the amount of 300,000 because you have a 100 par value. And the subscription payment is 90,000. For Atilio, 4,000 subscribed shares with a subscription value of 400,000. And then the subscription payment is 100,000. And then for Baladhay, you have 2,000 shares subscribed, subscription receivable in the amount of 200,000, and subscription payment in the amount of 40,000. On August 5, this is the first transaction. You have deposited to Land Bank the amount of 230,000, okay, for the subscription payment. But first, you have to record the authorization of share capital. Now again, memorandum entry method and journal entry method differs in the authorization as well as the issuance of stock certificate. The moment you issue stock certificate, it means if the subscription has already been paid, or if the issuance of share capital is made in cash or property, or payment to liability or service, it is good as fully paid. So you will issue a share certificate or stock certificate. Now, the first entry would be to record the authorization. If you're using the memo entry method, you just put in a memorandum entry in your T account or on the ledger of ordinary share capital. These words, authorized to issue 25,000 ordinary shares at par value of 100 per share. For journal entry method, this will be your entry. You will debit an issued ordinary share 2,500,000, and then credit authorized ordinary share 2,500,000. Okay. Next transaction is August 5. Okay, the payment or the subscription payment has been deposited to Land Bank of the Philippines. So as you can see, you will have the same entry. Okay, since this is recording of the subscription, you have here the entry. You debit subscription receivable, ordinary 900,000, and then credit subscribe share capital 900,000. Now for this amount, you can see that in the problem, that's 300,000 for Abelia, 400,000 for Atilio, and then 200,000 for Baladay, for a total of 900,000. And then the second entry, this is for the payment of cash, the payment of the subscription received, or the subscription received. You have debit to cash 230,000, credit subscription receivable, ordinary 230,000. Again, same entry under journal entry method. Subscription and recording of payment, you will have the same entry. Okay. The next transaction, again still on August 5, withdraw the amount of 5,000 for the incorporation fees. You have here the cost of printing and other expenses incurred in the incorporation process. So you call it as organization cost or organization expense. So you will have the same entry under the two methods. You have debit organization cost or expense 15,000, and then credit cash 15,000. Okay. Now, on August 10, you have here a transaction on August 10, issued 250 ordinary shares to Attorney Alconera for legal services amounting to 28,000, and issued share certificate. Again, this is an example of issuance of shares in payment of service or liability. Again, you will base your amount on the service, the amount of the service, or the amount of the liability. Any difference between the par value of the shares issued as well as the or against the amount of the service or the liability will be treated as premium. And take note, this is good as fully paid. So that is why you will issue a share or stock certificate. As you can see here, this will be your entry. Under memorandum entry method, you debit legal expense 28,000. You credit share capital 25,000. Now, how did we come up with the amount 25,000? That's 250 shares multiplied by 100 par value. Because when you record share capital, you will always record it at par value. Any amount higher than the par value, you will record it at share or as share premium. Like in this case. So you will always record share capital at par. Any excess will be recorded as share premium. So the excess of 3,000, you will then credit it as share premium. Now for the journal entry method, this will be your entry. You debit legal expense 28,000, the amount of the services, and then you credit an issued share capital 25,000, and then credit share premium 3,000. Okay, so that's issuance of certificate or issuance of shares for services received. Next, August 20 transaction. Concepcion Panimdim subscribed 500 ordinary shares at 120 per share and made a down payment of 30%. Again, this is subscription as well as partial payment. You will have the same entry sa memo entry method and then the journal entry method. So this will be your entry first. You debit subscription receivable 60,000. you credit subscribe share capital 50,000 and then credit share premium 10,000. Now, how did we come up with the amount? You will have a premium in the amount of 10,000. Okay. Now you will base it on the par value 500 times 100. That's 50,000. And then 20 times the excess, no, of the par value, which is 20. 20 times 500, so that's 10,000. You will record it as share premium. Okay. And then for the 30% down payment, this will be your entry. You debit cash 18,000 and then you will credit subscription receivable ordinary 18,000. Again, same entry under journal entry method. Next, August 29. August 29, June Ace Navarro acquired 1,000 ordinary share in exchange for a lot for office use. The market value of the lot was 130,000 and issued share certificate. Now, this is an example of issuance of share, okay, for non-cash, no, non-cash asset. Again, the order of priority is that first you will record it based on the fair value of the non-cash asset received. If there is no fair value of the non-cash asset received, you will base it on the fair value of the shares issued. If there is no shares issued, then you will base it on the par value. Now, in this case, we're given the fair value of the land. So that is why you will record this transaction based on this value, 130,000. Now, the excess will be treated as share premium. So this will be your entry. So you debit land, 130,000. This is under memorandum entry method. Credit share capital, 100,000. How did we compute for the credit of share capital in the amount of 100,000? That's 1,000 times 100 par value. So that's 100,000. The excess, which is 30,000, will be recorded as share premium. Again, the old term for this one is additional paid-in capital. Now, under journal entry method, debit land, 130,000, and then credit an issued share capital, 100,000, and then credit a share premium, 30,000. An issued share capital, again, you have to credit that based on par value. Same as share capital under the memorandum entry method. Next transaction, September 1. Issued 200 ordinary shares to Marilia Bonciso for cash at 110 per share and issued a share certificate. So this is a sample of issuance of share in cash. So as you can see here, by the way, this should be, let me correct this one first, an issued share capital. It should be an issued share capital. This is journal entry method. So this is credited at 20,000. So this will be your entry. 200 at 110. So we did receive a cash in the amount of 22,000. So that's 200 times 110. Okay. And then you will credit share capital at par. So that's 200 shares times 100. So that's 20,000. The excess in the amount of 200 share times 10. So you will have a share premium in the amount of 2,000. Under journal entry method, so you debit cash, 22,000, and then you credit an issued share capital. So that's 200 shares times 100 par value. So that's 20,000. And then credit share premium for the excess, you have 2,000. That's the excess of the par value. Next, this is September 12 transaction. issued 300 ordinary share to Execal Prospero at par value and made a down payment of 40%. So as you can see, you will have the same entry. So the entry will be a debit to subscription receivable, 30,000. So that's 300 ordinary share times 100 par value. And then credit subscribe share capital, 30,000. And then for the down payment, which is 40%, you will debit cash 12,000 and then credit subscription receivable 12,000. By the way, I want to emphasize this one. Though I presented it in this way, I will just put same entry. But in your exercise later on, please copy the whole entry. You have to copy the whole entry. Do not just put same entry. Okay? So you have to copy the entire entry. And then the last transaction, we have here the last transaction. One of the incorporators paid her subscription in full and a share certificate for 2,000 shares was issued. So the subscription of Baladhay, you have 2,000 shares with a value of 200,000. So first entry is to record the payment of the balance. So that's debit cash, 160,000. And then credit subscription receivable, 160,000. Same entry under journal entry method. Debit cash, 160,000. Credit subscription receivable, 160,000. And then for the issuance of the certificate, since the subscription has already been fully paid, under memorandum entry method, you debit subscribe share capital ordinary, 200,000. And then you will credit share capital, 200,000. Under journal entry method, this will be your entry. Debit subscribe share capital, 200,000. Credit unissued share capital, 200,000. Okay? So I do hope you have learned something with regards the two methods, memorandum entry method and the journal entry method.